Hey, it's Tycoon with Stock Market Investing TV. And in this video, we're going to start reviewing the basics of what a stock chart is all about, how to read it, and that way you get a better idea and understanding of what you're looking at when you're looking at a chart. Um, if you're not familiar with my channel here, what we're doing is going through a case study using the CanSlim method, starting from scratch, just kind of working our way through the strategy and sharing the results with you. Right now, we're working on the M and the CanSlim of market direction and looking at stock chart. If you haven't subscribed to the channel, be sure and do that below because I'll be putting more videos up as I continue this series. And be sure and like the videos if you like what I'm doing. If you got any questions, you put them in the comments. So let's get started with how to read a stock chart, where to find the stock market indexes, and so this is what a stock chart looks like. And so I'm just going to go over the basics of how to read a stock chart and kind of what we're looking for here in terms of market direction. So you can see at the bottom down here, this is time. So it starts January, February, March, April, and all the way down. And this is, you can see up here, there's a button that says daily. It's kind of solid there. That means this is a daily chart. So there's daily charts, weekly charts. You can see they have an intraday chart as well. But the first thing at the bottom is time, and that's, if it's a daily chart, then these all represent each individual stock trading day. If it's a weekly chart, it's a total for the whole week. And then on the um, uh, axis here, this is the value. So it's a logarithmic scale, so it's not one-to-one. So it's kind of squeezed in there so that it all fits nicely. And you can see here it goes from 1800 to 2100, and the stocks have been trading within that range. Now, uh, so you have time and then you have value. So uh, here you can see that this last trading day that's in red here, there's a long line and then there's a little bar right there. And so what this represents is this is the trading range that happened during the day. So this was the low for this S&P 500 for the day, and this is the high. And then where the bar is where it closed for the day. So you can see that it closed down from the previous day, and so that's why this is in red. So you can see the day before it's in blue, and it's color coded that way because it closed higher than the day before. So if the S&P index closed lower than the day before, then it's going to be red. If it closed higher, then it's going to be blue. So that's what the colors mean, the red and the blue. Now at the bottom here, you're going to see these bars. Now these bars represent volume. So you can see there was lots of volume here. It tells you how many shares were traded, but you can see volume was really heavy today, and the market closed lower. So that's not a good sign. That means that's what's called a distribution day. But anyway, the important thing here is that this is volume. And since this S&P closed lower today, it's also red. So you can see the days that there were more days in red or more days in blue when you look at the chart. So what we're looking for here on this chart is, did the market close higher or lower? Did it close higher or lower on higher or lower volume? So you can see the day before the market closed higher but on low volume. So that's not necessarily a indicator of strength. So you have the time, you have the value, you have the volume, and you have the trading range, and then you have the where the market closed for the day. And then you're going to see here too, there's also a couple of trading lines. And so this one in red here represents the 50-day moving average. And so this is an average of the previous, like right here, represents an average of the 50 previous days of trading. And so you can see that the market closed way below the 50-day moving average. And so sometimes these moving average lines are used as an indicator of resistance to get an idea of where the market's headed. So if it breaks through its moving average, that's a positive sign because you can see that it went on up higher, and you can see when it breaks through its 50-day moving average and ended up going lower. So sometimes it's used as a way to kind of indicate whether it's up or down trend. The other line here is the 200-day moving average. So it operates just like the 50-day moving average. It's just a longer period of time. So that's the basics of reading a stock chart. So individual stocks are going to work basically the same way for individual stock charts. This is just how you read the market index stock chart and kind of what's going on there. So I hope that helps you understand how to read a stock chart. And if you have any questions, put them down in the comment. I'll be happy to try and answer them for you. So, hey, I'm Tycoon, and I'm continuing my series on how to buy stocks using the CanSlim method, and just using this case study as I work through the strategies and kind of explain to you what I'm doing as I learn along the way. So, I hope you enjoyed the video and have a great day.